Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Mish Schneider, Director of Trading, Education, and Research at MarketGauge.com. Mish, it's great to see you as always, and September is proving to be what it's known for, a little bit of volatility in the month, and it's largely due to all of the macro data. We're kind of in that vacuum of earnings, so when you think about the macro and you look at the indices and the economic modern family, what's really sticking out to you?
Well, a couple of things. One is that you hear so many reports on financial media about this horrible drop and deep recession we're going into. And yet you also do hear some people who think that we've bottomed and going much higher. But if you just look at where we're at, it seems to be kind of a scenario of things aren't as bad as what people believe they could be. Doesn't mean they can get worse. But for now, with a couple of good economic stats and getting over the scariness of the Jackson Hole and we're going to raise rates forever until inflation is broken, that all seems to be on the sideline now. And the market itself has settled into this very technical zone between the 50-day moving average and the 200-day moving average. And it's classic here for the economic modern family because it was led by the transportation sector, which is probably the best news that we have of all, because if the transportation sector is moving, trains, planes, automobiles, freights, et cetera, that means that demand isn't as weak as people would lead you to believe, number one, and that supply is kind of sort of right now in balance. Is that growth? Is it stagnation and not necessarily deep dive recession? Yes.
Mm-hmm. And when you think about the outliers, when you look at the longer dated bonds and junk bonds and the dollar, of course, which has had quite the move as of late, what do you think that part of the market is, how is it's digesting the macro?
Well, here's another situation. The dollar obviously has been this incredible flight to safety. And with all of the concerns in Europe, people have been buying the dollar. And the nice thing for us in the United States is we're still better off than everybody else. But on the flip side, there seems to be these overriding questions that the market asks or investors interpret, which is, can things get much worse? So in Europe, after all the bad news is out and a couple of things they're trying to do to really deal with this energy crisis that could get worse in the winter, raising the rates and capping the price that people will pay and how much they can use. It's like almost saying, well, things can't get that much worse. So now you finally saw the dollar, as we're talking today, come off from the highs. Does that sustain? But if it does sustain and we start to see the dollar weaken, that will actually be good for equities and commodities until you get to the point, of course, where people go, oh, wait, that may be inflationary. And then in terms of the junk bonds, what's so interesting about the junk bonds is they have been, talk about a technically perfect chart. If you look at HYG or JNK, whatever you prefer, they had made triple bottoms from the COVID lows to the most recent lows we've had in 2022. They bounced, they retraced a little bit. And now, again, they're also clearing some critical levels here. So it's showing you that regardless, again, of whatever people want to scare you with, there's risk on happening right at this moment. And of course, the question is, for how long?
Right. And we tend to focus on the US, of course, Europe, and what's happening with Russia and Ukraine. And we're always talking about what's happening in China and Asia, but we haven't really talked about emerging markets in quite some time. India, Mexico, Latin America. Are there any quiet opportunities there?
Well, India has actually done very, very well. They, even through this last horribleness that Pakistan experienced with those floods that wiped out a lot of homes, people, and crops, India's kind of held in there. So India is actually doing pretty well on a performance basis. In terms of some of the other emerging markets, I don't know if I'd necessarily be running into some of the European countries right now, but Latin America and maybe even Mexico have my interest, because if things stabilize here in the United States, obviously they're going to be impacted. If commodity prices stay relatively firm, that will be good for those countries. And today, as a matter of fact, ILF has popped up. It's hitting some resistance at the 200-day moving average. But if it continues to go up next week, that's probably a good buy.
Yeah, and you have an interesting mix of emerging trends here: cannabis, football season, and digital.
Well, I always like to shake it up a little bit. Well, football season, yes. And so we had looked at a couple of things. DraftKings From a fundamental standpoint, obviously fantasy football will prosper. And there are only a few states I found out that have legal online betting for professional football. I was actually dismayed to find out New Mexico was not one of them. But, Budweiser actually just got an upgrade. It went all the way down. And if it can get through this 50 level, I think that could be an interesting little pop play. As far as cannabis, I'm always interested in cannabis. And I don't want that to be taken the wrong way. But essentially what I mean is the stocks have been so beat up. It's a crop. It's a commodity. California grows it. They have water problems. And also there has been buzz about congressional SAFE. The passage is actually called SAFE, to try to get this interbanking thing going. I still think there's a bargain there. I do. And then digital, Ethereum cleared a very key level. Bitcoin has been consolidating for 3 months already. It's just something Marathon is probably setting up as a buy right here over 14 if it can hold. And it's kind of been a sleeper. So a lot is everywhere, but those right now are 3 just fun areas to look at.
All right, Mish, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.